And welcome, everyone. Our top story, markets jumping higher to kick off the final week of trading for the month. Look at this. All three indices are on pace, by the way, to end June in the green. The Nasdaq up nearly 5.5%, slightly lower in today's trading. We'll check out the Dow up 342 points. Let's get reaction from the Kobeissi letter editor-in-chief, Adam Kobeissi himself, and capitalist pig hedge fund manager Jonathan Hoenig. Gentlemen, thank you both for joining us. Adam, let me begin with you. More green today, but let me ask you this. Are we seeing any signs of fatigue in these markets, especially, I should point out, among the semiconductor heavyweights?
It's interesting today. As I've been saying all year on the show that we're bullish of the S&P, calling for higher. And we recently raised our target to 5,600. But today is interesting because we actually see NVIDIA, the chip stocks, down pretty big. NVIDIA down around 5%. But stocks are actually still pushing higher with the S&P going towards 5,500 again. And I think this is an important trend to note, that there's a lot of capital in these semiconductor stocks that once they sell off, they're actually rotating back into the equity markets, but into different names, which haven't really led higher until this point, which I actually think is a healthy trend that we're seeing, and we continue to call for higher equity prices.
Let me ask you about NVIDIA, Jonathan. Do you have concerns about how this stock has moved, how much it's moved, how quickly it's moved, and is it showing signs of a little bit of, as I said, fatigue or exhaustion?
Yeah, I mean, actually only 200% in just the last year. Look, NVIDIA is responsible for something on the order of 60% of the entire stock market's gain this year, this one stock. And what worries me is twofold. First and foremost, actually, is the concentration. Higher highs tend to beget more higher highs. The trend is your friend. What's different this time is that concentration. We've got the top 10 stocks, names like NVIDIA, now accounting for 20% of the entire market. That's the largest concentration since at least 1980. And even more than that, actually, is the focus on these stocks. I mean, we talk about AI the same way that we did, pot stocks back in 2017, or even nanotech stocks back in 2015. So I like small cap, I like value, much better investments right now than chasing a stock already up hundreds % in just the last 2 years.
Very good. Adam, we're wrapping up the second quarter. We're now in this period where you could say, look, we have the summer doldrums, lighter trading, lighter volume. We have the overhang of a presidential election, and we still have a ton of cash on the sidelines. Where does this all play out with regard to the markets over, say, the next quarter, the third quarter?
Yeah, I think we're going to start to see some larger swings. Actually, historically speaking, in a presidential election year, on average, you see a 25% spike in the volatility index between July and the election in November. But I also think that these large swings, I mean, you mentioned it, there's over $6 trillion in money market funds. There's record levels of capital on the sidelines. I think a lot of these dips are going to still be bought. And regardless of what the Fed does, I mean, I know we have PCE coming up on Friday. The data's starting to move in the right direction, but we actually think we're only going to see one rate cut this year. But regardless, I think these big tech names, it's just a lot of dip buying. It might be FOMO buying, but at the end of the day, the market is pushing higher, and I think it's a very difficult and very dangerous trend to fight if you're going to try and call a top in this market right now. We'd rather just ride the momentum. As other guests said, the trend really is your friend right now.
It is indeed. Jonathan, look, we talked about PCE. It's the key measure that the Fed uses, the core personal PCE. The question to me, I guess, to ask you is, if this comes in higher than expected, does the market take a turn south? Or if it's pretty benign, do we see a jump?
Yeah, that's the irony, actually. You've got the Biden administration taking victory laps about how inflation is coming down. Meanwhile, some 70% of homeowners are literally struggling to keep up financially. Prices up some 22% in just the last couple of years. So look, government spending is what creates inflation. Government austerity is what fixes it. We certainly haven't seen that from the Biden administration. So I still like names like gold, GLD, Ashley, PPLT is the ETF that tracks platinum. I think the inflation story isn't over over just yet. It might be quiet. It might be slower than it was before, but I think inflation is likely to run hotter, and this is going to continue to vex not only investors, but every American. And look, the yield curve is still inverted, actually. You're getting paid more on a 3-month T-bill than on a 10-year bond. To me, that says the economy isn't as strong as you'd think.
Yeah, that's sticky inflation. Jonathan and Adam, thank you, gentlemen, both, for joining us on this Monday. Really appreciate it.